Investing in capital assets like stocks, bonds, and real estate can be very profitable, but many people are completely unaware of the capital gains tax rates they will have to pay when they sell their assets at a profit. If you own capital assets and if you don't fully understand capital gains tax rates, you could get stuck owing significantly more to the IRS than you might have to. If you accidentally misreport your capital gains or you underpay your taxes for them, guys, you can serve serious consequences with the IRS. So today I'm going to explain everything that I want you to know about capital gains tax rates, including the updates for 2024, so you can be fully equipped, fully clear on what they are and how to best mitigate those taxes. Without further ado, let's dive in. All right, guys, let's talk about capital assets. The first thing you need to know about capital gains taxes is that they only apply to capital assets. Capital assets are a significant piece of property, such as stocks, such as bonds, and yes, real estate. But did you know that it also includes collectibles like art and jewelry? So anything that you own and use for personal or investment purposes could be considered a capital asset. But in other words, if you own a piece of property and if you expect this piece of property to appreciate in value over time, then there is a very good chance that the IRS will consider it to be a capital asset. And this could be everything from shares of Microsoft stock to an investment property. Karlton, what about my cryptocurrencies? Is it my Bitcoin or Ethereum a capital asset too? The answer is yes. The IRS considers cryptocurrency to be a capital asset. So don't think that the IRS won't want a cut of your crypto capital gains, because it most certainly will. Let's talk about short-term capital gains. The IRS divides capital gains into two very specific categories: short-term capital gains and long-term capital gains. Short-term capital gains are capital gains that are generated on capital assets that you have held for less than 1 year. This could include a capital gains that you made from buying Tesla stock or even holding GameStop and selling it for a profit. So what are the tax rates for short-term capital gains? Well, short-term capital gains are taxed at ordinary income rates. This means that if you have short-term capital gains, you're taxed like everybody else with a W-2 job. In other words, the tax rates that you will pay for short-term capital gains depends on your filing status and the amount of taxable income you generate per year. Ordinary income tax rates range from 0 all the way to 37%. And if you're in the highest of tax brackets, guess what? You have to pay that. There are 4 primary filing statuses: single, head of household, married filing joint, and married filing separate. And typically, most people who are a qualifying widower get to benefit from married filing jointly. Each of these filing statuses has different income limits for each tax bracket. So to know what short-term capital gains tax rates you expect to pay, you first have to figure out what tax bracket you fall into with your ordinary income. You can figure this out by looking up the tax brackets for your filing status and your income level. And you can ask a tax professional like myself if you're having difficulty understanding which tax bracket that you fall into. Let's jump into long-term capital gains. You see, as I mentioned earlier, long-term capital gains are capital gains that you generate on assets held for over a year. And generally speaking, long-term capital gains have better tax treatment than short-term capital gains, and most investors prefer long-term capital gains because they're taxed at 0, 15, or a maximum 20%. The income limits for each long-term capital gains tax bracket changes every single year due to inflation. However, here's a look at the 2024 brackets. For single filers, the long-term capital gains tax rate is 0% for people who make between $0 up to $47,025. It is 15% for those who make $47,026 upwards to $518,900. And finally, it is 20% for those who make over $518,900. If you're head of household, the long-term capital gains tax rate is 0% for people who make between $0 to $63,000. It is 15% as soon as you cross over $63,000 upwards to $551,350. And it is 20% for people who make over $551,350. If you're married, the long-term capital gains tax rates for 0% go from 0 all the way up to $94,050. It is 15% for couples making over $94,051 upwards to $583,750. And it is 20% for people making over $583,750. So guys, to understand how this works, let's go over some examples. I want to make it all real. Roger is a carpenter. He makes $100,000 per year. He is single, and 2 years ago, he bought Bitcoin. He recently sold it and made a profit of $50,000. Roger's income puts him into the 15% tax bracket for long-term capital gains tax rates. So he would owe a $7,500 long-term capital gains tax rates on his $50,000 profit from his Bitcoin investment. Let's go to example number 2. Martha is a nurse who is the head of a household. She makes $45,000 per year, which puts her in the 0% tax bracket for long-term capital gains. Martha recently sold her Apple stock that she had been holding for 5 years. She made a $10,000 profit on the sale. Because she falls into the 0% long-term capital gains tax bracket, she will not owe any taxes on her gains from this investment. Guys, capital gains taxes are a little bit different for collectibles. I need you to pay close attention here because this is the part that a lot of people get wrong regarding capital gains taxes. Collectibles have slightly different capital gains tax rates than any other type of capital assets like stocks or bonds. The IRS considers all of the following things to be considered collectibles: artwork, stamps, coins, cards, comics, and rare items such as antiques. The difference for collectibles when it comes to capital gains tax rates is that instead of being only limited to a maximum long-term capital gains tax rates of 20%, collectibles are taxed at 28% for long-term capital gains. This means that you could potentially have to pay significantly more in long-term capital gains taxes if you invest in collectibles compared to other capital assets. However, the short-term capital gains tax rates are the same for collectibles as they are for other capital assets. So if you hold your collectibles for a year or less, you'll be taxed at ordinary income rates, which is the short-term capital gains tax rates. So if you're someone who likes collecting paintings, comics books, sports cards, and if you have high income, your capital gains tax rates could be as high as 28%, not the 20% that you might have gotten used to. So, will the capital gains tax rates change anytime soon? Although the capital gains tax rates have been the same for quite some time, it is possible that they will change in the future. I mean, look at our president. They've been changed a number of times throughout history, and generally speaking, all kinds of tax rates tend to change in America over time. So it's definitely likely that these will change at some point. You should also keep in mind that the capital gains tax brackets are adjusted for inflation every year, just like the normal capital gains tax brackets. So just because you are in one of the capital gains tax brackets currently doesn't mean that you're going to be in that capital gains tax bracket next year. If you want to know which capital gains tax brackets that you'll be in 2025, then all you have to do is hit the subscribe button, or you can wait and visit the IRS.gov's website. Well, we're almost at the end of this video, and yes, congratulations, you have made it all the way through a tax video. Here are the key points that I want you to walk away with so you walk away smarter. The rate that you pay for capital gains tax rates depends on whether or not your gains were short-term or long-term. Hopefully they're long-term. If they're long-term, you have the more favorable tax rates. Short-term capital gains tax rates are taxed at ordinary rates from 10 all the way up to 37%. Long-term capital gains rates are at 0, 15, and a maximum 20%. And sometimes if you have collectibles such as artwork, stamps, and antiques, you could be paying a maximum long-term capital gain rate as high as 28% instead of that 20% that we've all gotten so comfortable with. Guys, if you have any questions about capital gains tax rates, how to avoid them, then feel free to get in touch with my team by clicking on the link below in the description. Schedule a complimentary consultation. Let us see what we can do. I've also included a link to my new Tax Strategy Accelerator community. I would encourage you to join. In this community, I provided a wide variety of highly beneficial resources, including all my ebooks, all of my courses, and much more. You can also network with highly influential entrepreneurs like myself and others inside of the community, so I would love to see you inside of there. Go ahead and get access to some of the information I don't release on YouTube. I know you want that. And that's all I got for today's video, guys. Hopefully now you have a much better understanding of capital gains tax rates, but let me know your thoughts in the comments on what you think is going to happen with the capital gains tax rates with this next presidential election. I'm curious to hear your thoughts. Until then, I'll see you in the next video. Cheers.